What's going on, guys? Back for another week with Mr. Sean LaSalle. How you doing?
Good. How are you?
Good to see you. I'm doing well, thank you.
Yeah.
I'm doing well. A lot of stuff going on in the news, and if anyone knows anything with Sean, besides being a rock star agent, having a great team, he has a good insight with anything legislative, anything that has to do governmental, bills passing. If I have any questions, this is the guy I go to. So, road to housing bill coming out, getting passed, going through the House to the Senate. From what I believe you said. So give us a little insight. People might have heard about this.
Yep.
You have a good brushstroke of knowledge on what this does. It sounds like a fantastic bill coming through. We could use more of this.
It's one of the biggest housing bills to pass in a long time. It's called the 21st Century Road to Housing.
Okay.
And it passed the Senate and it moves on to the House now. So
Gotcha.
passed the Senate by a vote of 85-5.
Okay.
So very, very bipartisan. Everybody knows that we have a lack of inventory pretty much nationwide, but especially in the Northeast and Lehigh Valley and New Jersey and Pennsylvania.
Yeah.
And one of the biggest things that's officially done now with this bill, what's included in this bill is the large institutional investors. They can no longer purchase single family homes. So
Yeah.
what large institutional investor is basically somebody or a company that owns more than 350 homes. And they can no longer buy single family homes, and that's huge.
Yeah.
That's huge because there's parts of the country and they started coming to the Northeast in New Jersey and in even the Lehigh Valley. They were starting to eye things up.
Yeah.
So they would come in. Wall Street investors would basically come in and buy up single family homes and turn them into rentals. And the issue with that is that they have a lot of money.
Yeah.
They don't care what the returns are. They have to invest to make a profit for their investors,
Yes.
right? The people that buy their stock.
Yes.
So they were competing against the first-time home buyers and the people that were in the market to buy single-family homes. And if the house was listed at $500,000, they're coming in and paying $600,000, $700,000. They don't care,
Yeah.
right?
Yeah.
So that's hopefully going to, increase the inventory loads. Not so much here in the Lehigh Valley, but elsewhere like New Jersey. So that's a big part of the bill.
I would say I remember us talking about that. I think maybe a month or two ago. That was one of our topics. Was something like that of them coming in. Maybe because we went through and it's not such a big deal here, but in other parts of the country, it's huge.
It's huge.
So you said 350, right?
350 homes.
So even it doesn't sound like much, but there are investors coming in. It's a lot of properties, but 350 properties. It's easy to max that out, even in an area like ours here in the Valley.
Yeah, we were the National Association of Realtors was really pushing for that number to be like 10,000 because there's a lot of realtors that have 350, 400 homes.
Sure.
But once we support a bill and it goes through, either to the Senate or to the House, and our legislators are talking about it. Before things pass, like things change, and they just felt like 350 was a more or a better number. So it affects a lot of investors, but at the end of the day, it's all about increasing inventory.
Yes.
Right.
Yes.
Having more options for buyers.
Yeah. That's great.
Especially first-time home buyers being 40, it's hard for them to really compete. The other thing is environmental studies and stuff like that for new construction.
Yes.
Like it's always been a hard, long road for developers to go down, especially when they come across environmental things like, saving box turtles and stuff like that.
Permeable surfaces.
Yes.
There's a huge thing of water and watersheds. And things.
So this bill is aims to like take that time frame and shrink it down so that it doesn't cost so much money for developers to go through the process of getting approvals and stuff like that, and it's quicker for them to get shovels in the ground.
That's great.
Yeah.
Yeah. That's what we need more than anything. To your earlier to point one is housing.
Right.
Rates are what they are. The buyers are wanting to buy. It's just there's nothing there. So that'll speed that process along. That's fantastic. That's good.
Another part of the bill is giving funding to local municipalities that increase inventory. So when local municipalities come up with a game plan to plan more houses, whether it's affordable housing or any kind of housing, A lot of municipalities don't want to build. They don't want to develop. They don't want to grow.
Yeah.
But it gives them an incentive if you do and you
Mhm.
create more housing opportunities in your municipality,
Mhm.
you can get federal funding to help you with those plans and
Gotcha.
those
Would that be
projects.
like infrastructure, roads, things like is that? Do you think that's
Yeah.
the main reason why municipalities don't? Is it because of just
Well, I think there's a balance, and
yeah,
it's not. I don't think it's a political thing, really. I think it's just human nature to want to preserve
yeah,
open space,
hmm
and people don't want to see low income housing in their backyard.
yeah,
They don't want to see conversions like they want to keep the old architecture of their
I gotcha.
community and stuff like that. So there's a
Yeah,
lot of reasons why some municipalities back off of
yeah,
yeah, we need more housing, but not in our backyard
yeah,
type of thing. It's always not in my backyard,
yeah,
right? So this will hopefully get some municipalities to change, like
yeah,
locally, like Weisenberg Township,
hmm
which is western Lehigh Valley,
hmm
Lehigh County. They're really not into new development. They like
yeah,
their open space. Same
yeah,
with Williams Township over in Northampton
yeah,
County. They like their open space.
yep,
Hopefully, there's a lot of land there,
yeah,
and it's close to everything.
yep,
So, if there was an opportunity to put more housing stock, which are 80 some thousand housing units short in the Lehigh Valley,
yeah.
well, those are the towns that have the space to do it.
Correct. Well, and they get the tax revenue too for those things. That's why I was driving out there with my son over the weekend. We had to drive out towards Harrisburg. And I was thinking the same thing. As you go out there, it just opens up. And then, you're taking 78 or whatever out there. It is not that much of a commute to just jump on
No.
there. You have some tractor trailer traffic, but if they would open up like nice, smaller townhomes, even like something you can get into.
Yeah.
For those areas, because even around here in the Lehigh Valley, like when you're over in Albertus and some areas like the Fairways of Brookside, prime example, those condos, always a great starter home when those pop up. Great price point. We need more of those. I mean, it's like one or the other. It's like that, or everything's like $500,000-$600,000, which is out of reach for a lot of people.
Yeah.
Yeah, that's great though. That's fantastic. They can speed that up a little bit,
Yeah.
get some money.
Then there's manufactured housing, which basically expands federal financing and lowers the cost for manufactured homes, which is a way developers can build homes at
Yep.
less money for
Yep.
less money.
Those are, and I said 100,000.
Well, that's the
Yeah.
small dollar mortgages.
Yep. Yeah.
So I don't know much about that, but
Yeah, so that's where, and when you said that too, anything under usually like $100,000, you run into, there's laws in place called high cost loan limits. So if you do mortgage, that's why certain banks and lenders won't do loans under 50,000 or something like that, because the cost for them to originate the loan, they're set costs, appraisals, underwriting. It's the same to manufacture a loan, to bring it to the table. It's the same work if it's 50,000 or 50 million. It's the same work.
right.
So, but as a percentage of the loan amount, there's a high cost loan limits where you run into that. So that would hopefully, and that's why that perked my ear the most, because that'll help out tremendously with the lending side of things. Allow more lenders to do those loans, and that'll help the borrower because there's more competition, possibly lower rates. That's great.
Okay, good.
Yeah, it's awesome.
And then what do you know about the CBDC, which is it's a 4-year ban on Federal Reserve central bank digital currency? I have no idea what that means. I'm thinking about
that sounds like
crypto or
that
something.
sounds like a TBD on that one. I have no clue.
Yeah,
That has no Federal Reserve stuff with what they're going to have. I'm excited to see too with Warsh coming in. He had his first interest rate decision, which they kept everything the same, and talk going down the road of, it'll be interesting to see where he wants to go. Everyone forgets he was one of the board members. He was a voting president before, and now he's the president of the Fed. So he was on, I should say he was a president, he was the board on voting. So, and we have still, Powell is still remaining. So we'll see how that plays into everything else. But oil's come down tremendously, which is great.
Oil's down.
It's just everything.
Bank of America just said that we're expecting 3 rate increases this year.
I know. That's what I've been hearing. We're in a flux right now. I think right now we are in shots across the bow of just whatever is going to happen with inflationary things. So it's going to be seeing, the oil was the big thing, and now bringing that off the table, we'll see what's left over in terms of how it plays out with inflation. So it went from the price of oil to produce all the widgets. That goes away, but everything else is just core PCE, the basics that we're going to get back to. So I think once everything, my opinion is once we settle out, not to get off topic, but once we settle down with the Middle East, finally, it's like deal or no deal. Once we get that figured out, then we can have more of a clear path. So, but people forget, and this sounds silly, when mortgages with them especially, certain times when the Fed raises rates, sometimes it actually drops mortgage rates. So when the Fed raises rates, that's your credit card, car loans, home equity lines, it doesn't directly 100% impact your mortgages. It's the overnight spending rate. So we'll have to see. We'll have to see how that plays out. But overall, at the end of the day, if your rate is 5.9% or 6.9%, having that house long-term, or historically, just look back. I tell people, Google it. Google, go back and look at mortgage rates going back 30 years, guys. And then look at home appreciation. It's just, they are what they are.
I mean, I understand people worrying about interest rates, but long term, like I don't think it matters what the rates were. I mean, when I was a kid, I remember my parents had an interest rate at 16, 17, 18%.
Yep.
Right.
And they survived. They lived.
They survived. And if you look at, it's cost more money to live today, but you also make a lot more money than my parents did, our parents did.
Correct. It's all relative.
Right. Yeah, they bought their house for $50,000, $50,000, but they had an 18% interest rate.
Yeah.
And I don't think there was even a 30-year loan back then.
No, they had like 20 years and stuff. Yeah.
Yeah.
Well, it's good. It's good news from what you brought today. That's awesome. So thank you, as always, bringing in the that aspect of the real estate side. That's where if you ever have any questions, Sean's always the guy to call to go through. He knows more than anything the real estate plus anything like governmental. He's got an ear on that. So the takeaway is this is going to hopefully open up opportunities for housing. There's no direct impact on lowering the rates and borrowing costs. It is actually just opening up the door to have more inventory. Which is fantastic.
The whole goal is to have more inventory to choose from, awesome. which should steady, steady prices a little bit and just get some more people out of the rental market and into the buying market. Because ultimately that's the only way to gain or grow generational wealth is by buying a home.
Absolutely,
not renting.
Yeah. All right. Good takeaway,
Thanks,
Sean.
Buddy.
All right, guys. Any questions? As always, you guys know where to find us. Have a great rest of your week, and we'll catch you next time.